The most ambitious bet in modern business history is unfolding right now, and it's not on cryptocurrency, green energy, or space exploration. Wall Street and the world's wealthiest billionaires are pouring hundreds of billions of dollars into artificial intelligence, betting that this technology will reshape the entire global economy. But why are some of the smartest minds in finance willing to risk such enormous sums? The answer reveals something profound about where humanity's future is heading. This is not merely a technology trend. This is a fundamental restructuring of global capital allocation toward what many believe will be the most transformative technology in human history. The scale of the investment boom. The numbers are staggering and they keep growing. Just 4 technology giants, Amazon, Microsoft, Meta, and Alphabet, are collectively investing more than $300 billion into artificial intelligence infrastructure in 2025 alone. That's more than the total GDP of most countries. Amazon alone plans to spend $200 billion on AI and data centers, a jaw-dropping commitment that has shocked even seasoned Wall Street analysts. This spending represents more than double what Amazon invested just 1 year earlier, signaling absolute desperation among tech giants to maintain their competitive positions. Meanwhile, venture capitalists poured over $200 billion into artificial intelligence startups during 2025, capturing roughly half of all global venture funding. This represents an 80% increase from 2024, demonstrating that investment momentum is accelerating rather than stabilizing. Companies like OpenAI, XAI, and Anthropic have raised billions of dollars in recent funding rounds, valuing many artificial intelligence companies at tens of billions before they have achieved significant profitability. Goldman Sachs estimates that if investment trends continue, companies could be spending as much as $500 billion on AI by 2026. To put this in perspective, this is comparable to the total infrastructure investment that transformed entire industries during the railroad boom and the internet revolution. The sheer magnitude of this spending tells investors that major corporations genuinely believe artificial intelligence will fundamentally transform how businesses operate. These investments are heavily concentrated in data center infrastructure and semiconductor chips, particularly graphics processing units that power AI systems. NVIDIA, the company that manufactures these critical chips, generated $129 billion in revenue during its fiscal year 2025. The demand is so intense that the company shipped hundreds of thousands of its most advanced chips, and every major technology company is competing fiercely for access to this limited supply. Elon Musk, recognizing the strategic importance of AI chips, transformed an abandoned factory in Memphis into a massive supercomputing center named Colossus in just 122 days, equipping it with 200,000 NVIDIA GPUs. Why Wall Street believes in artificial intelligence? Wall Street isn't making these bets blindly. The financial industry has calculated that the long-term economic opportunity is extraordinary. McKinsey estimates that generative AI alone could add between $2.6 trillion and $4.4 trillion annually to the global economy. To visualize that impact, it's roughly equivalent to adding an entire economy the size of the United Kingdom every single year. The productivity gains are already measurable and substantial. Research shows that workers using generative AI tools become approximately 33% more productive per hour. Studies examining customer support, writing, and software development found that generative AI improved performance by an average of 66%. For businesses, this means they can increase output without proportionally increasing labor costs, fundamentally changing the economics of productivity. Investors recognize that early adopters of AI technology gain enormous competitive advantages. McKinsey's research found that early AI adopters could boost cash flow by 122% by the year 2030. In contrast, companies that delay AI adoption may see cash flow increases of only 10%. Late movers could even experience cash flow losses of up to 23%. This competitive disparity explains why major corporations cannot afford to sit on the sidelines. The most prominent Wall Street veterans and tech billionaires are directly backing this assessment with their own fortunes. Jensen Huang, the CEO of NVIDIA, has seen his personal wealth skyrocket to levels that make him one of the world's richest individuals, Almost entirely due to the AI boom, Mark Zuckerberg has committed Meta to spending roughly $40 billion on AI infrastructure and recruited top AI talent from across the industry, including the 28-year-old co-founder of Scale AI to serve as his chief AI officer. Sam Altman, the CEO of OpenAI, has become one of the world's most powerful technology executives, steering the development of systems that governments and corporations view as strategically essential. The competitive pressure driving investments, one critical factor motivating these massive investments is simple fear. Technology companies cannot afford to lag behind competitors in the artificial intelligence race. If one company gains superior artificial intelligence capabilities, it can capture market share and redefine entire industries. This competitive dynamic creates an arms race where every technology giant must invest aggressively or risk becoming irrelevant in a world dominated by artificial intelligence. Additionally, every company is convinced that artificial intelligence will eventually become central to their business operations and competitive strategy. Amazon CEO Andy Jassy stated that his company is monetizing capacity as fast as it can install it because demand for AI-powered cloud services is extraordinarily high. The company's AWS division posted $35.6 billion in quarterly revenue, with an annualized run rate of $142 billion, and much of that growth is driven by AI adoption among customers seeking to integrate artificial intelligence into their operations. No major corporation wants to be the company that invested too little in artificial intelligence and subsequently lost market dominance to more aggressive competitors. Real return on investment. What distinguishes this technology from previous investment bubbles is that companies are already seeing tangible returns on their artificial intelligence spending. 88% of companies surveyed reported that AI increased their annual revenue. 30% reported increases greater than 10%. 87% said AI reduced their annual costs, with some industries like retail reporting cost reductions exceeding 10%. These returns are happening across every industry. In manufacturing, companies like PepsiCo partnered with technology firms to create digital twins of their facilities, using AI to identify potential system failures before they occur, preventing up to 90% of problems. In healthcare, artificial intelligence accelerates drug discovery and diagnostics. In finance, AI improves fraud detection and trading algorithms. In retail, AI powers recommendation systems that increase sales. For example, Amazon has reported that cross-selling and upselling powered by AI recommendations account for as much as 35% of its revenue. The global economic multiplier. Economists have identified a powerful economic multiplier effect from AI investments. For every dollar companies invest in AI solutions and services, the global economy generates approximately $4.90 in additional value. This multiplier effect means that the initial $300 to $500 billion investments by major corporations will trigger far larger waves of economic activity throughout supply chains, manufacturing, construction, and service industries. The architects of artificial intelligence, the world's most influential technology leaders, have staked their reputations and fortunes on artificial intelligence. Time magazine named 8 artificial intelligence pioneers as its collective person of the year for 2025, recognizing that these individuals, Elon Musk, Sam Altman, Jensen Huang, Mark Zuckerberg, Lisa Su, Demis Hassabis, Dario Amodei, and Fei Li, are reshaping civilization through their artificial intelligence initiatives. These 5 individuals alone possess a collective fortune of $870 billion, much of which was accumulated during the past 3 years of the artificial intelligence boom. When billionaires with this much wealth and influence collectively move in one direction, it signals something genuinely transformative is underway. Oracle's legendary founder Larry Ellison called Elon Musk Mark Zuckerberg, and Sam Altman the smartest engineers he knows, crediting them with visionary investments in artificial intelligence that will pay off enormously. Musk has founded xAI, a company developing advanced artificial intelligence systems while simultaneously advancing AI capabilities at Tesla for autonomous vehicles and at SpaceX for rocket optimization. Zuckerberg, after Meta's artificial intelligence models fell behind Chinese competitors, responded with an aggressive talent acquisition strategy, bringing world-class researchers into Meta's organization and committing billions toward building the most advanced artificial intelligence infrastructure possible. The speed at which new artificial intelligence billionaires emerged in 2025 further demonstrates investor confidence in the sector. More than 50 individuals building artificial intelligence infrastructure, models, and applications became billionaires on paper during a single year. Edwin Chen, the CEO of data labeling startup Surge AI, accumulated an $18 billion fortune. The founders of Scale AI and the AI coding startup Cursor became billionaires almost overnight through funding rounds that value their companies in the tens of billions of dollars. The bottom line, Wall Street is investing billions into artificial intelligence because the evidence overwhelmingly suggests that this technology will drive unprecedented economic growth, productivity gains, and competitive advantages. Companies that invest heavily will likely dominate their industries. Those that don't will probably fall behind. For investors and billionaires, artificial intelligence represents the most significant technological opportunity since the internet revolution. The scale of these investments, the power of the competitive forces driving them, and the measured returns already materializing make one conclusion clear. Artificial intelligence will fundamentally reshape global business and the economy for decades to come. This is not speculative hype. This is calculated financial strategy based on emerging evidence of genuine transformation.